I'm Alex Coffey in for Oliver Rennick here on Market on Close. Joining me now is Scott Bauer, the CEO of Prosper Trading Academy. Scott, a pullback in Bitcoin, another rejection at 100K. I know you got your eyes on this market, at least one eye on this market. Do you make anything of today's action, or is it just kind of a quiet day and it just sticks out because it's a 2% move?
Yeah, it's just another quiet day, honestly. I mean, we're still trading in this range. And, until we break out of it, maybe 92, 93 on the bottom, or break out to the upside and hit that 100, I don't think it's really anything to write home about right now. In fact, I actually think this is a good thing, this consolidation. Even though we're seeing a wider range, it is consolidating in this range. And, that typically sets up for a nice next move. And obviously, the Bulls are hoping that move is to the upside.
There's a lot of excitement in names that are just kind of associated with the space, either outright or kind of tangentially. MicroStrategy is a big one with sort of that leveraged Bitcoin play. If Scott Bauer was looking to kind of get involved in this space, you just go straight to the source here, kind of think of it like gold or crude oil, just go into the commodity itself, or do you look at some of those kind of plays that are almost like proxies?
One of two things. If I'm trading it, I may look at one of the proxies, because I think there's so much liquidity in MSTR, Amara. Even if you look at some of the ETFs that are trading IBIT, there's new ones that launched at the CBOE today as well, CBTX, MBTX. So I think you can look to some of those proxies. Coinbase, maybe even. I mean, Coinbase is trading with incredible volatility, really swings with Bitcoin. And, for a day trader or a very short term, I like the proxies. But if I'm, looking more of an investment, when I say investment in the crypto space, that could be a matter of weeks, not years. I probably go right to the source.
Makes sense. What about in gold? Similar kind of thought process here when you're thinking miners versus the metal itself. Maybe miners that shorter term, beta exposure, gold, more the rock hard asset it's supposed to be.
Yeah, absolutely. Though, the miners really took it on the chin more today than gold itself did. You look at NUGT Nugget, that really got hit. But I think in the gold space, this is one I would lean more towards just owning gold or owning GLD, the gold ETF. Sure, you can play the miners. There's a lot of volatility. There's a lot of volume. But you know what? Gold is still really volatile. So even if you wanted to day trade it, even short term, you're getting a lot of movement, a lot of volatility. And I think there's a lot of opportunity there.
Yeah, and in that, is it kind of a tradable range then you see, or are we just basing for that next massive leg one way or the other in gold as far as you see it?
I think it is a tradable range, but I would always lean it to the long side right now until that bottom range breaks. Alex, we've talked about this. Gold has been a buy the dip, not a sell the rip. So sure, you can trade it back and forth, but I would lean on the buy side, meaning if I'm going to initiate a trade, it would be on the buy side first, not on the sell side.
You mentioned the word volatility, and when I hear that word, I'm thinking commodities. It's hard not to discuss natural gas. I mean, this is not for those with the weak stomach. This product swings, and it's making a move today. You could argue this is kind of a quiet day for natural gas, only down 4%.
Yeah, what a move. It was just a few weeks ago that we're trading under 3, like 270, 260, and it was, there we go, the widowmaker once again. And then all of a sudden, we get this blast of cold air pretty much across the entire nation. And all of a sudden, you see this massive spike up. So yes, if you like volatility, great place to be here. I think this is more a sell the rip than it is a buy the dip, but we'll see how that plays out.
And Scott, when you're looking at a product like natural gas, obviously this isn't one that every trader is active in. You mentioned that term widowmaker. I think that what is that, the March-April spread officially is sort of what that is referring to. Is this a product that if you're going to, you look at those kind of calendar spreads, or is this something where you look at it outright, or is it just one that you just kind of watch and admire from a distance?
So if you're an experienced trader, you look at the calendar spreads. There's lots of opportunity there. If you're not, if you really don't understand the way that the curve and the skew works, you got to go just right to the source because you can get yourself in a lot of trouble. But for experienced traders that have traded this before, sure, those calendar spreads can offer a lot of opportunity.
Yeah, it's certainly earned its name for a reason. Scott, what do you make of today? Final thoughts, maybe 30 seconds or so. Obviously, excruciatingly quiet, surprisingly quiet. Not even a million S&Ps traded today. Is this just a hangover from the turkey this weekend, or what's going on?
I think it's more just a little complacency ahead of what we're going to get at the end of the week with the jobs numbers. That's, the big focus now, and that could be the turning point for what happens with rates. If we get a really hot number here, maybe the Fed backs off. It's still looking like a quarter point drop. But, this Friday is really going to be one of the last pieces that the Fed is going to hang their hat on to help them decide what the next move is going to be.
Yeah, Scott, I mean, it's a sentiment that's been echoed by everyone. Jobs data this week is going to settle the score. It's going to probably give us an idea of what's going to happen with the Fed. And, of course, we'll set up perhaps a Santa Claus rally. Thanks to Scott Bauer, CEO of Prosper Trading Academy, for his insights.